Welcome back to another video. Today we are going to be discussing the same 7 stocks that I called out as a watch list for the first quarter of 2026. They had some price movements, and I think it's actually an important time for us to be able to take another look at them and make sure there's still buys, and see where the new price targets are of where I'm going to be buying at and go from there. So, once again, I'm not a financial advisor. I'm not your financial advisor. I'm just a guy who loves money and loves investing. So, hopefully, we can learn something together and we can move forward and everybody make money, right? So, make sure you do your own research. Don't buy anything just because some guy on YouTube decided that he was going to buy it. So let's take a look. The stocks I'm watching: Adobe, Salesforce, PayPal, Meta, Trade Desk, ConocoPhillips, and Plug Power. The last three are highly speculative, so make sure you're doing your own research and make sure it's something you actually believe in before you go ahead and make that purchase. So to start, we're going to look at Adobe. I use Fidelity as my main source for trading. I really like Fidelity, easy to use. You can gain most of the knowledge that you need to make valid decision making and make sure you're hitting your price points, and you can see all the info that they post, and they also have the news, the upgrade updates, all that kind of stuff right on here. And I just think Fidelity's ease of use is just fantastic compared to other apps. I know most people might be using like a Robinhood or something. There's absolutely nothing wrong with that. You don't need to go out and transfer everything to Fidelity just because I use it. But I do like Fidelity for all-in-one service. So let's move forward. We're going to take a look at the chart for Adobe. On Friday, they were down almost 3%, almost $8. So if you remember in the previous video, and if you didn't go watch that, it is a useful video in my opinion. It has a lot of information in there that I'm not going to cover in this one. So if you want to, please go back and watch that and you can kind of see where I'm pulling some of this info from. So we broke through that bottom 308.85 roughly that I called out in the previous video. So we did actually bounce off of this first line, the pivot line of resistance, and we came down in that channel that I was discussing of where I'm going to be buying heavily. So we actually hit that resistance, and then the following day we actually broke right through it. So now our next resistance line on the bottom side is going to be 288.40 or around 288. So I'm going to be looking at buying all the way down to 288. If we break through 288 on the bottom side, I'm going to amplify my buying, and more of what I DCA in every single week is going to move towards Adobe. So we're going to take a look back and we're going to see the last time you could have purchased at the price we're currently at. We are looking at being in November of 2022. So three and a half years. That's kind of crazy. Once again, this is a value play. This is a long-term play. I believe in Adobe. I think they're going to do great things in the future. And I actually believe that they're more in the AI space than what people are giving them credit for. And to me, it's screaming a buy. They still have negative sentiment, negative momentum. So once again, we're going to be DCAing in. I'm not saying drop all your nest egg right into Adobe because it's going to skyrocket next week. There's no way for me to know that, and that is not what I believe is going to happen. I think we're going to keep playing on this negative side until we start hearing some good news, reporting some good earnings. So that could take months, that could take even a year, but we're in for the long haul. So not a get rich quick scheme overnight. So I'm looking at a buy on Adobe. Let's check some of the news. This is what I like about Fidelity. You got news right here. They reported some stuff. I believe we start on the third page here. And you can see that they got some price adjustments from the analysts. So price adjustments. If they want to maintain a neutral rating, they have to stay within a certain range of the current price. So don't let it fool you. Sometimes if they want to just maintain a neutral, they have to bring it down within, $60, $50 of the current price to be able to maintain neutral or market perform. Obviously, if they want to maintain a buy rating on a stock and the stock goes up to 350 and their buy rating was 320, well, they have to increase that rating so that way they can maintain that buy. So there's a little bit of conflicts in with it that you don't just take it for exactly what it's saying. They may just want to be maintaining a certain rating, so they have to adjust the price target. So, with that being said, everything on Adobe is looking to be on the up and up. I believe that this is just a fear crash, a sell off due to people not believing they're going to be in AI enough, or they're not going to be able to compete with those that are heavily in the AI, meaning using AI for Photoshops, things like that. But Adobe's implementing it, and I think people are kind of failing to catch that. So we're going to move on to Salesforce here. They did the same thing as Adobe. They broke through that resistance on the lower side and they came down to test the 250 bar, the 226.48. They're currently at 227.11, down 2.75% or $6.42. So to me, we bounced off this upper resistance bar, 264.70, and we came down. We broke through our moving averages, and we did not find any kind of sense of support all the way down to this 226.48. That is a little bit of a show of weakness, but we were just down here, and we showed that this resistance bar has held up. So that's kind of what we're hoping for. Right now, it's a buy, but if we break down below that 250 bar, then we're looking at we can go all the way down to 213.34. Now, if we break down below that 250 bar, I am going to be looking at increasing the amount that I DCA into Salesforce overall. We have been in this zone once in November 2025, back in April 2025, on this one here, August 2025, but we have not broken down below that resistance since May of 2024, the end of May. So we're looking at it's been a while. We've been testing that resistance all the way through. That is kind of a show of weakness that we keep testing to the lower side. So hopefully Salesforce and Agentforce is going to actually do something for us here. And I believe it's still going to be a buy. I believe it's a strong company. It's got a lot of value left to it. And I think we have some upside potential, especially if we keep breaking down below these marks. I'm just going to keep buying and see for when they actually break to that upside. So this is the one that I wanted to show you guys. It's from Bazinga. It's what the whales are betting on. So the big money makers, right? They actually have a overall sentiment 37% bullish, 31% bearish. They have 8 of the 16 uncommon option trades for Salesforce. 8 were puts for a total of $523,000, and 8 are calls for $327,000. Now, that means we have a bullish stance on Salesforce. Other major market players are buying these dips, which is fantastic for us as long as we're buying as well. And in reality, if you remember the short options on GameStop, it was dumb money, right? So when they buy a short, that's actually shares that they do not own, that they plan on the market going lower. When the market goes up, they still have to buy at that price. So, or they have to sell at that price, excuse me. So they actually sell for a loss. And this is going to be so big if we can end up pushing Salesforce, or Salesforce ends up being on the upper side, meaning more bulls are going to make money than bears, and that's going to be fantastic for everybody. So I think that Salesforce is still a buy. It's not quite yet a strong buy. We're at that breaking point, which could turn it into a strong buy for myself. So we're going to keep an eye on that, and I think it's going to be good things moving forward. PayPal. All right, PayPal. You've probably been seeing it in the news that the banking industry is just going to be destroyed. They're on the negative sentiment, and I think PayPal still has a strong market share in what they have going on. They're not just a bank, they're moving into the banking. They want to become a lender, which is going to be huge for them. We are right at that resistance, that 250 bar, the 556.46. We're knocking on that door. So right now we're in that buy range that I'm looking for. And I believe if we break to that bottom side, once again, it turns into a heavy buy. I'm going to be allocating more of my dollar cost average amount that I put in every week towards PayPal. I think it's going to be a strong company moving forward. They're definitely in the right sector right now, the AI, but the money moving portion. So a lot of people still use PayPal. I actively use PayPal. It's another layer of security when I make transactions, which is just fantastic. And I think that this company is going to do very well for itself. So we're going to see if there's any updated news that I can take a look. Once again, they made some adjustments. They want to do equal weight. So when it moves down, if they want to maintain equal weight, they're going to keep moving their price target down. That to me is there's nothing wrong. It's no indication of good or bad. You do have some stable coin funding. Now, when it comes to stable coins and cryptocurrency, I do enjoy cryptocurrency. I am an advocate for it, and I think cryptocurrency is going to be a part of the future. However, I do think you'd be silly if you don't think that PayPal doesn't already hold a bunch of cryptocurrency. All these banks do. Now, whether they actually offer it to you is going to be a different story, but I believe that this cryptocurrency transition of whatever is going to partake in the future is not going to hurt these companies as much as what people are thinking. It is going to help the cryptocurrency companies more so, but they're already making transitions. You can already purchase cryptocurrency through a lot of investment sites. You can actually trade and make transactions in cryptocurrency as we speak. You just got to find it right now. It's not widely accepted. So I think that's actually going to be a good thing for PayPal because I think they're smart enough to be ahead of the curve. I think it's only going to be upsides from here. There may still be a little bit of a downside in the near future, which is exactly why we're ramping up how much we're going to be putting into PayPal. All right, moving on to Meta. Meta, they are down almost 0.09%, 55 cents. In the last week, they broke through that bottom resistance that we spoke about in the previous video. If you haven't watched that video, please go back and do so. There's a lot of valuable information in there. So right now, Meta just became a stronger buy for myself. We're looking at our next resistance down is going to be 597.99. If we end up testing that resistance, I'm going to be buying the whole time. If we break through that bottom resistance, then that's going to put us into the same channel that we were in, not even at the end of November, mid to end of November. That was a great buying opportunity. Sadly, I missed it. You can see all the negative sentiment and everything that we had going on. We're right back into it, right? So hopefully we get another buying opportunities such as this, which I'm going to amplify my buying of Meta during that range. So right now it's still a buy. I think we're in Meta's a very strong company. They have strong earnings. They're going to do great things. And I'm excited to be buying Meta right now. See if they got anything in the news. They scrutinize big tech's talents acquisitions. They're going to be able to get whoever they want. That's just kind of the way that it is. They can incentivize people so strongly to be able to join their team. It's just kind of crazy. So you got some price target adjustments. They maintained buy. And if you notice, the price went down, they went down. So obviously they still have a buy. They're going to be buying all the way up to $800 per market share. So you just got to take that with a grain of salt. They're not going to be exact with their analysis of each stock. It's just, it is what it is. So we're going to move on to the trade desk. And the trade desk has seen better days for sure. We're looking at, we broke down to that bottom side of the resistance. We have not come down and tested this 32.35 yet. It's still a buy for me. It's a very speculative stock, so don't put all your money and all your eggs into one basket, meaning the trade desk. I do see some upside potential of us getting back around this 54, 90, $55, somewhere in that range. You could see that our moving average here, our 150, is actually around 53.83. I think we can see resistance at that mark again if we break to the upside. We just need some more information on how they're handling their competition and make sure that they're receiving new contracts, and Amazon and Google using their walled gardens aren't going to knock Trade Desk out. But we haven't been down. We were down at this price range in December. We haven't been down in this price range. And we're moving back. We're moving back. Oh man. We haven't been in since December. It was in June of 2020. So if they can show us that that competition isn't going to affect their direct business and they still have strong earnings and numbers, I don't see why. And gaining new customers. Gaining new customers is going to be key for the trade desk to push us back any kind of higher than what we're trading at now. I believe that they are doing great things and I see upside potential. That's why it's still a buy for me. If we come down below this 32.35, it turns into a strong buy for me. And I'm going to be upping how much I'm actually putting in. So we had a couple of coverage initiations from them and some maintain price targets movement. Nothing major from them. No new customers, things along those lines. So I'm excited to see their next earnings, which is going to be Q4 2025, February 10th. So it's coming up here in a few weeks. I think we're going to see some upbeat to it since they've been maintaining their current customer base phenomenally. And I think good things for Trade Desk, hopefully. ConocoPhillips. This one, we just came down below our price target of 98.56. We did test down here at that 95.29. To me, that was a buying opportunity. We're going to be looking at, hopefully, we can break down below this before anything happens with that Venezuelan oil that's going on right now. Highly speculative stock. They have a lot of debts. We're going to see if they move down to this price target of 92.34. That turns into a strong buy for me. I see only upside potential from there. Now we are playing with this upper resistance here, that 98.56, and we're just not able to actually break through and stay above. So there is some selling pressure at that price, and I think anywhere below it is a decent buying opportunity. But in reality, we do have some positive momentum, and people are looking at it as a buying opportunity as well. So hopefully we can stagger in here a little bit longer so I can increase the amount of shares. It is a highly speculative stock. If, Senate says, no, we can't use that oil or whatever it is, it's going to send all these oil companies spiraling. There's a chance of that. So just do your due diligence and do your own research beforehand and make sure that this is something you actually want to invest in before you start throwing money in. So they've had a couple of downgrades, underperform. Once again, I think all of this is driven by what's going on in Venezuela. I don't think that they're actually going to be underperforming the market depending on what happens with that oil. If they lock in and they get a piece of it, then it's only going to be good things. But highly speculative, so make sure you do your own research. Plug Power. This is one of the only ones that, since I did that top stocks for January, that is actually on the upside. However, we are playing with that 240 bar resistance heavily. We're not able to break above it. That's actually starting to show a little bit of weakness to the bottom side, but we are still in an upwards momentum. So that's going to be a huge thing if we do end up breaking through that top side. We're above all of our moving averages right now, which is going to be huge for them. I'm still looking at them being a buy if we come down and test this bottom bar of 175. If we don't break through the top side and we come down, this is going to be our next bar of resistance. You can see it here of what happened in November. And that's exactly where I would see it as another buying opportunity. So I'm actually going to put Plug Power on a hold from buying more. I want to see what we're going to be doing in this resistance. If we break to the upside and we start going up, I might buy a little bit more if we have a kind of like a reset or a second buying opportunity to where we come up, we have a small sell off of people trying to pull out some of their profits, and then we can amplify it and come right back up. But as you can see, what happened in September is we broke to the upside, we broke even higher, we came back down, tested, we played around to the bottom side of that resistance, which was another buying opportunity, and then we had a surge up. That's exactly what I'm looking for again. Highly speculative and not a strong company via profitability. So it's kind of hard when you're playing with essentially a penny stock and they don't have strong profit or growth. That's going to be huge for them. They are a small cap, and we're going to see where it goes. So I didn't see any kind of news. They had a couple of upgrades from the analysts, and I think there's still potential in the hydrogen game. You can go back and watch my other video. I talked about it a little bit more. So those are the 7 stocks. Once again, I'm not a financial advisor, not your financial advisor, just a guy who loves investing and hopefully can give some insight to people and you can learn. If you got anything out of this video, you found any of the information useful, you're tracking any of these stocks yourself, please make sure to like, subscribe, follow for more, share to a friend that might be interested in some of it. And I will see you in the next one.